really got to figure out how are you creating active income, because that's what's going to allow you to buy the rentals sustainably and be able to like create the true financial freedom. So I think it's really important that sometimes it might make sense for them to stay in longer what they're doing, because that might be their superpower and they make great money doing that, right? Be able to take that money and then maybe go find an operator. And I mean, so first, the easy hack is just keep doing what you're really good at and go find a good operator to partner with and get into the right deals and learn enough. Like if I could tell them one skill is to learn how to underwrite and know good deals from bad deals. If you can learn how to do that, you can create a good filter, because there's lots of opportunities out there. And if you can just filter and know that, then you don't have to go build everything out and do everything I did and be good at what you're best at.
Welcome to the Real Estate Mogul MD podcast. Thanks for tuning in and taking control of your financial future. This is a show where we not only motivate and inspire, we give you actionable real-world experience to help you live life by design. You'll hear journeys and stories from other physicians, investors, coaches, consultants, and entrepreneurs. And now, here's your host, Brett Riggins. What if you could work half the year and build a real estate empire on the other half of the year? Today's guest didn't just dream it, he did it. From oil rigs to 120 units, Casey Gregersen turned W-2 income into a fully integrated real estate business while raising 4 boys and scaling across multiple markets. If you've ever wondered how to grow without breaking, this one's for you. Let's get into this. All right, here we are. Well, today the birds are chirping loud and clear all the way from somewhere in Arizona where the sun is shining. And Casey, you are smiling. How does it feel to be Casey today?
Man, it is good. You're right. I'm outside, get to work, I'm on the road away from the family today, but I can't complain. It's sunny and I'm getting to do what I love, so I can't complain.
Yeah. So the travel time is good to get away, but it's hard to get away sometimes too. Do you have kids?
Yeah, four boys.
Woo, 4 boys. That's a house full of fun. What are the age ranges?
Yeah, 11, 9, 6, and 2.5.
Oh, perfect. Well, great time. Well, thank you for having us on your calendar today. We're excited to learn more about you and your background and your experience and start talking about real estate right out of the gate. So tell us a little bit about professionally where you were and where you're at today.
Yes. Yeah, I'm probably similar to a lot of your audience, right? I worked my W-2 for a long time, actually. So 2010 is okay. So I bought my first rental property in 2010 when I was going to school at the University of Wyoming. My degree was, I got a master's in petroleum engineering. And yeah, I did that. I went to work for Shell in 2011 as a drilling engineer. So it was really cool. I had this sweet gig of, all the engineers, right, we come in the office, but they send us all out to the field to really go learn the operations. And typically we have to go out there for a year. But when I got out there, we would spend 2 weeks on a drilling rig, and then we'd have 2 weeks off. And when we were off, you didn't have to answer a cell phone, open a computer, like you were off. So I was able to start buying rental properties, fixing and flipping deals. And initially I was just doing all the work myself, right? But I just had this cool luxury of doing that. So when the time came of like, they're like, all right, your field assignment's up. You got to go back to the office, or you're supposed to go back to the office like all the other engineers. I'm like, no, I'm staying out here. I can make the same amount of money, work half the year, and be able to I was kind of living 2 lives, right? I got to live in my entrepreneurial life for 2 weeks, and then I was able to have my W-2. So I did that for like 12 years like that, basically.
Wow. And what is, I have in my notes here, other franchises. Are you buying franchises as well too?
Yes, right. That was when that was when did we buy our first Pure Bar? Around 2016, I believe. So I was still working. I was actually working in Midland, Texas. So right in the middle of the heart of oil and gas country. And we started the Pure Bar franchise. And that was my first taste into like running a small business. And at one point we had 7 of those spanning from Houston to Midland all the way out to San Diego. It was one, I thought we were going to scale that for a while, but it was also learned some super valuable lessons on it was a hard business to scale. It required a lot of like manpower, and it required a lot of my time. It was not a good return on my investment of my time. So we've since divested those and went all in on real estate. So
we're looking at Shell, right? The oil and gas world, and this Pure Bar, which is fitness franchise, right? What is it exactly that sparked that shift from fitness, from the W-2 fitness to real estate? Like, what was the thing that really cued you in, Casey, that's like, I've got to make this change?
Yeah, I think being in the field and getting exposure to it, right? Like working on a drilling rig, but then getting to like do my own thing and go find a property and fix it up and just like I always talk about that. But like even aesthetically, like when you fix and flip a house and get to see the transformation, like that was one of the things that hooked me. And then my undergrad was actually math and chemistry, but I've always been a numbers guy. So I just love the numbers of real estate. And I mean, I'm sure a lot of people can relate to this. When you're in your W-2, once you start to get that entrepreneurial bug and that itch, it really ruins you as a W-2 employee. And granted, I kept mine for a long time because it was really helping bankroll and helped me had kept good credit. I had good access to capital and using banks. So I kept my W-2 for a long time, but really I was ruined ever to be a W-2 employee because I'm like, I could do my own thing. I could control my own destiny. I can actually see like the fruits of my labor, and I can actually go like I can change something and impact it, you know?
Yeah. Yeah. Not necessarily ruined, but I think it's the fuel. The way that you're doing that or did that, where you're using the W-2 to basically fund that transition, right? Not necessarily real, but it helped me get over that fear, because that day when you make that decision that you're not going back the next day, or that next morning that you're going in to give your 2 weeks or whatever it may be, that takes some kahunas, right? It takes something, especially if you've got a family. At that time, like when I went through the situation, I had 2 young kids. I had a company that was taking care of me, man. And it takes that so much to get past that. What was that like for you, going to that day where you went in and be like, hey guys, this is it for me?
Yeah, it's a long story, but I'll give you the cliff notes of it. I had kept it going, right? To your point, like I was able to play it safe, and I still had, like, I really looked at it like I had my W-2 was really bankrolling my life to where I could pay for everything I needed. And then I was able to take everything I was making off of fix and flip or off my rentals, and I was able to just keep snowballing that and reinvesting it and growing it, right?
Yeah.
And I went from like, originally I built out just doing property management in-house. I trained VAs to do that. My next step was going direct to seller and building a marketing company to find deals. Right. And then the third one was building out contractors to where I could actually have construction in-house. And now I have all 3. But I was doing all that while doing my W-2 because I could depend on my W-2 to pay my bills. And then I could just keep reinvesting and building this out. So once I got it built out enough, then it became like, what's really important. And I was still having to compromise time with my kids. And at this point, when I first started all this, I just had the 1, right? And then I had 2. And now all of a sudden I got 3 and 1 on the way. And it's like I'm having now to choose between them because something had to go, right? I had Shell, I had real estate, and I had my family, and I couldn't balance all 3. And so at the end of the day, it was a pretty easy one to know which one was going to get dropped off.
Mm-hmm. Interesting. Yeah, just knowing where to put that no. I mean, you can only say yes so many times. Where to put that no is really important. Tell us a little bit about that first deal that shaped your future approach. You talked about flipping. Was it a flip that your first deal?
Yeah, you know what? The first one was a rental property that I still own to this day. About 15 years ago in Laramie, in a college town, it was definitely the catalyst. But I think the more important one that I think that would be worth sharing is the second one, right? So the second one, I had a gap. Like I bought that first one in 2010, and then I just worked on my W-2 job and focused on that. But then I read Rich Dad Poor Dad, and I started reading other books and podcasts, and I went and bought the second one. And the cool thing was I took the money from the first one that I had gone in and done some improvements and put a bit of elbow grease and fix that thing up. And then what I did is 5 years later, I went to the bank and I said, hey, I want to get a cash out refinance. So I pulled out $50,000 from that first one. And then I went and bought my next one. And I found more of a fixer upper. It was actually like a house that I was able to convert to a duplex. And here's where the pivotal moment was, and like where the light bulb turned on was once I finished that, I used $50,000 from that property that I didn't pull out of thin air, but I didn't have to save all this money or go borrow it from someone else or partner. I literally used equity from an asset I had, and then I bought another one. And with that, I had $1,000 of cash flow by the time I was done with the first one, right? When I bought the second one, once I fixed it up, put a tenant in there with my mortgage, my taxes, insurance, all my expenses, I was making $1,000 of cash flow. And then I'm like, holy cow, what if I multiplied this and did more of these? Like that was the path. And that was like the light bulb moment for me.
$1,000 a month in cash flow, right?
Yeah.
Yeah. So, in looking at your annual income, looking at 12 G's, and not completely passive, but more passive than what other active investments would be. Flipping, right? Once you get stabilized, there are a few little bumps in the road along the way, but it settles down a little bit. So it sounds like after reading the Purple Bible, it's called here in the real estate world.
Yeah.
Your action immediately was to go buy another one using that asset, right, to pull out the equity, which did not create a taxable event. You got money and didn't have to pay additional taxes on it, and basically put your army to work out there, bringing in more money. Now you're running a full real estate team now, right? What does it mean to be fully integrated?
Yes. So as mentioned, I built out those different companies because at the end of the day, like if you can control the deal flow, right? I mean, fundamentally, to do real estate, you got to buy right. Everybody says it's all where you buy. So we do that by buying direct to seller, right? Oh, okay. So we buy direct to seller, okay, and then that's the first part, right? And then you want to be able to manage it. So want to be able to manage your rental properties, which was the second one, but the bigger one was construction, right? Because I always, when people talk about, I think the biggest risk in real estate, if you're playing the long game, like you're going to be fine. But the biggest risk is construction and the contractors, because there's a lot of unknowns there. And I've gone through many trials over the years of working with the right contractors and doing deals where we lost money because we either were over budget or we didn't have the right crews, right? So that being able to bring that in-house and control that, now it makes my business so much more predictable. And I'm telling you, when I'm talking to a seller or my team is, and we're looking at, hey, here's a deal we could take on, we could fix it up. Everything is much more predictable because we know what it's going to cost and we know how long it should take. And it completely separates me from most other people who are trying to go get another deal. And they're like, well, now we got to go find a contractor. Hopefully he'll come to our job and put us on his list and put us on a schedule, versus we're like, we know it's predictable and it allows us to really scale.
Yeah, scheduling is a huge piece of that. One of the challenge, you're spot on there. So acquisitions, property management, and construction, kind of like the three buckets, right? Just the years of struggling with those things. And the challenge I've had, Casey, through the years is people. And the challenge that I've had in the construction world is it's like more people, more risk. Yes, I'm bringing it in-house, so I'm reducing that risk. I have more control. That means I got to work with more people. I'm not a inclusive or a secluded person. I'm not necessarily completely outgoing, but when it comes to my business, I kind of like to keep it simple. How can you keep it simple? Do you simplify it by markets? Are you staying in a single market to keep the control of the company and keep the size down?
Yeah, it's been, to your point, yeah, it's definitely been a lot of work to build it out, build these teams, managing a lot of people. But what I've tried to do is, well, it's a couple things, right? You read books and people talk like who, not how. So being able to find the right people, to me, it was the right people from the ground level, but also having the right managers. So, right, what my old goal has always been: go build it, figure it out, hire the right people, and then the second phase is go hire a manager, right? And so now I've got a construction manager, we got a property manager, we've got an acquisitions manager managing each one of those, so they can sort of manage the people. And then the next level was a COO, which now I have underneath me who can manage all those people. And it's still an evolution. I'm still iterating on that, perfecting it. But that's been my way to because at the end of the day, I love this because then that way I don't have to be managing all the people, trying to keep things simple, right? But I do love the fact that if there's a hole in one of these departments, we can have KPIs and systems and dashboards to see that. And then I can go fix it, right? Like I can be like, okay, now I need to go put some energy into fixing this. Because, for example, property management, if you go hire a third party and then there's an issue that needs to be fixed, you trying to go in, it's not going to be easy to go fix that because it's not your company. You're not meeting with them daily, right? So that's what I love is I can come in and I still love fixing things and improving. So being able to jump in when I need, that's ultimately where I'm trying to get to. It's like I can be a CEO, a visionary, go build more business and have the businesses run on itself and then be able to help when I need.
CEO and visionary. KPIs, dashboards. It makes me think of was it Gino Wickman, the
Traction.
book. Yeah, for sure. Which is funny is on your website, I saw integrator on there, and you just said you're the visionary, and that's the opposite side of the visionary in the Gino Wickman world.
Yes.
Man, so much and bringing value based off of priority. I'm the same way. I'm a problem solver, engineering background, right? And math is kind of like the foundation of engineering. You know, what you had mentioned before. You have that path. You are able to prioritize where you need to put your time and be the problem solver. And that's where you bring the most value, right? So that's an awesome way to approach it. And it's from a business world, right? We're creating a business, not buying ourselves a job. What advice do you have for a physician or professional that's listening who wants to build a real estate business and not just own rentals?
Yes. Well, man, my first one, to back up a little bit, is like, yeah, I would do what I did, right? Don't be in a rush to leave what you're doing, because I always say you got to create a ton of passive income, right? Or sorry, you need to create active income before you create passive income. So that was one that I feel like Bigger Pockets. And when I grew up listening to all that stuff, it's all like, go buy as many rentals properties as you can and create financial freedom that way. But that can work, but you really got to figure out, how are you creating active income? Because that's what's going to allow you to buy the rentals sustainably and be able to like create the true financial freedom. So I think it's really important that sometimes it might make sense for them to stay in longer what they're doing, because that might be their superpower and they make great money doing that, right? Be able to take that money and then maybe go find an operator. And I mean, so first, the easy hack is just keep doing what you're really good at and go find a good operator to partner with and get into the right deals and learn enough. Like if I could tell them one skill is to learn how to underwrite and know good deals from bad deals. If you can learn how to do that, you can create a good filter, because there's lots of opportunities out there. And if you can just filter and know that, then you don't have to go build everything out and do everything I did and be good at what you're best at.
That's a great point. I mean, for me, when I transitioned out of the W-2 world, it was directly into real estate. And it was like, I had to have that active income. The pain, and I'm sure maybe some of the real estate people out there can understand that the pain of living flip to flip, that unknown, because I didn't have that backing and it was such a struggle. I had to go fast or I went hungry. So it was tough. But yes, you have to have that active income. And that's what we did. We used flipping and wholesaling to create these bubbles of capital in which we injected into the passive world. And once that happened, not saying it's all sunshine and rainbows now, but it is more comfortable now. When we're looking at real estate loves time, and we can stretch this out and make our investment decisions based on long-term investments. That's where the real payoff comes. Because yes, cash flow is great to keep these investments rolling, but the appreciation where we can withdraw this equity out of there is massive, right?
Brett, I couldn't agree more. That's why, like, the wholesaling and the fixing and flipping, to me, yeah, I'm like you. That's my active income. But to me, the safest way to make money in real estate is over time. And that's why we actually started our fund a couple of years ago exactly for that. So Bighorn Capital Fund is where I raise capital. And it's like, I wanted to find more people who have a longer horizon. Because if we look at this over 5 years or 10 years, right, it's very difficult to lose if you're following the right steps and you go over time, you're going to be fine. But when you've got to fix and flip, as you just mentioned, and you've got to sell that thing in 3 months or you're not going to eat, that's not fun and that's risky. But if you can, but I just love working with people who have that longer horizon, because man, that is the key to, as you mentioned, to creating wealth.
Yeah. Stretching that stuff out for sure. Now, you've bought and sold 50 plus properties, I think 7 franchises. What systems allowed you to move fast without breaking everything?
You hit on one of them, is Traction. Gino Wickman kind of running that process. And doing, for example, like with my COO now, we have quarterly meetings, right? We have these dashboards, but I think one of the biggest ones is having rocks, right? So they talk about your 90-day rocks. Like, what are the most important things that you got to get done in the next 90 days, and making sure you're tracking those every day and pointing back to them and circling back. And because if you're like me, you're a visionary and you got a lot of big ideas, but we got to make sure we commit to some specific things. And if you don't do that, and that's why I love my integrator, he helps dial me in and reel me back sometimes to where we're focusing on, hey, Casey, we agreed these were our rocks. we need to focus on these first. And then all these other great ideas, we'll work on them. We'll put them on the list, but let's complete what we've committed to first.
Mm-hmm. Yeah, reeling the visionary back in and explaining this glass. If we think of the glass as our time, right, and the sand is all these little things, the busy list of things that we got to do. The rocks are the big things that have inflection points in our progress for our businesses. And if we try to pour the sand in first and then put the rock on top, it doesn't work, right? So if you put the rock inside of this hourglass that we have and then put the sand in, then things work. So I just wanted to explain the rock piece of that for the EOS newbies out there. So what's one big mistake, or I guess just a mistake that you made while scaling too fast, and how would you do it differently now?
Yes, absolutely. Easy one comes to mind. So this was probably 7 or 8 years ago. We were doing the BRRRR strategy. So people who don't know, that's where you buy it at a discount, buy a property, you rehab it, and then you refinance it to get all your money back ideally, and then you rent it out. But because you refinanced it, you get all your money back, so you can go do it again. So we were doing that really successfully. And actually, I thought at this point I was ready to leave my W-2 job. We'd actually just moved to Dallas, Fort Worth, and I was excited. I was like, all right, now I'm going to exit oil and gas, and I can do this full time. But what I didn't realize is we still had, there was a lot of hard lessons we still had to learn. We had this kind of false sense of we've got this, right? Because we had a good general contractor, and we were finding good deals at good price points. We're like, we got this. Let's scale this. So we started doing higher end flips, and we figured those higher end flips will generate more cash that we can turn in and continue to feed that into the business and keep growing it and compounding it, right? But in reality, we still we scaled too fast, right? We didn't focus on what we were best at, right? We were doing really good at these lower end price points and they were a lot safer. So I learned an incredible lesson of, one, always have two exit strategies, right? On the lower end houses, if those don't work out as a fix and flip, you can keep them as rentals. And you can, to your point, we talked earlier, you can play the long game, right? If you're flipping a $1 million house and the market shifts, or you run into some unforeseen stuff in your budget and you can't sell that thing, the only solution is to drop that until you can sell it. And that often means a big loss, right? So that's what we had to learn, is always have two exits. And so that's one I always harp on, is have two exits. And the other thing I do is we now just structure our flips a little bit differently, where we pay I won't go too much into the details, but when we flip a house, we call it the revive method. We'll take over their loan, or if it's free and clear, we'll just close on it, but we'll pay our seller a profit share on the back end. And then we'll often pay them more, but I lock in my profit up front on my rehab to where I make sure I'm going to make that money. And that way, if I'm flipping that $1 million house and now something happens, I can drop my price significantly, because that's really just coming out of my seller's back end profit. And they know this going up front, right? But I'm mitigating my risk on a high end house to where, because again, I've done that. When you scale too fast and you're flipping big high end houses, you don't want to be there if you can't sell that thing. So it's two ways we mitigate it.
Yeah, interesting. And when we change that price point too, we decrease the number of buyers. So,
Yes.
Looking at that, whatever market you're in, looking at the average sale price, kind of staying in or under that. And then that two exits is huge. And I can look back to 20 or 30 houses that we've flipped that say, hey man, if we didn't sell those back then, my goodness, I would be very happy to have those now. Mm-hmm. If that could have happened. But everything happens for a reason. It's chiseled the experience repertoire that we've built these days. So I think we both have that excitement for the experience that we've shared. How do you pick target markets? What data or on the ground signals do you look for?
Ooh, great question. And it's a big reason why we do. So our target market is, believe it or not, I'm one of the only ones you'll probably ever hear from, is Wyoming. So I grew up in Wyoming, and I love this market, and this will answer your question for several reasons. High cash flow, meaning, and one of the big reasons are we have low taxes, insurance is still stable, and then lots of demand, right? So I compare this. So I live in Houston, Texas, right? And that market is, man, I love to fix and flip it, but it's a scary market to buy and hold, because taxes keep going up, insurance keeps going up, and interest rates are not helping, right? But there's a lot of demand and appreciation, which can be good. But I'm more of I want to make sure we have cash flow. Because when it comes to fixing and flipping, if we can be in a market where we can fix and flip and then we can also get cash flow, I feel like you get more. So to answer that more concisely, like low cost and the biggest one is demand, honestly, supply and demand. Like in our market, and another reason why I was not forced, but another reason why I prioritize building out my contractors is there is a finite supply of contractors in a state like Wyoming. There's just not enough. They can't keep up with demand. So therefore, house prices stay stable. There's a lot of demands for our flips when we get done. And then we can differentiate ourselves because we have the contractors. So fundamentally, if I'm going to answer that with one question, it's supply and demand. Find a market where there's not enough supply, and you still got people moving in.
And how is the interest rate affecting your acquisition machine right now?
You know what? Yeah, we pivoted big time. I mentioned that revive method I told you about a little bit ago. That's a one big way where we mitigate interest rates, because that's when I first started it. Honestly, it was when rates started going up and the market values were very much in flux. You were like, I don't know it's really hard for me to know with interest rates going up like they're going and no telling when they'll stop. What is going to be market value? So one big way is making sure that we were protected, that we could drop the price and still sell the house. Okay. Now, the other big one, which we do all the time, is creative finance, right? So this is whether the seller has it free and clear, or often the seller got a loan right around COVID or any time in the past probably 10 years, and they've got like a 3 or 4 or 5% loan, right? Today we're borrowing at 7-8% for me as an investor, if not higher. What we'll do is we find a lot of deals where they have this really good loan, and we like, it's funny. I talk to sellers all the time, and they're in this bad spot, and they're trying to sell their house. I'm like, the biggest thing you have going for you right now on this house is your 3% mortgage. Like, there's value in that. And so anyway, that's another way that's the way I've been able to build my rental portfolio despite high rates, is we structure our deals where we'll either take over that loan, or even better situation, we work with the seller who has it free and clear, and then we can just set our own terms to make sure it'll cash flow.
Yeah, and that seller finance creative subject to scenario, it can be a little daunting for someone who hasn't done that yet. But once you get through the fundamental, and how many times did you stumble before you closed one? I mean, if you're like me, I was like, I got so close, 7, 8, 9, like on the 10th one, I had it, and then I messed up on the insurance question. Like, what happens with the insurance? Well, I don't know, because I've never done this before. That doesn't give, the authority that you need when you're doing that. So it can be done for sure. And it's a great way, like you're saying, to overcome the cost of money currently. Since in the time that you spoke of, same way we had to pivot too, was the cost of money doubled. In 12 months, the cost of money doubled, and it changes a lot of things, even in the flipping world, for sure. Now, you've talked a lot about mindset, sports, leadership, and learning from coaches. And I've read up on your website here. How has that impacted, and how do you lead your team with that experience?
Yeah, I love it. Even to this day, right? Growing up, I played all the sports. I actually played college football in Montana. And yeah, I still draw on that, right? As far as even like being a leader, right? And how you can inspire your team. But I think what I'm probably most excited about going forward is being able to help more people achieve financial freedom. So one of my big goals is to help, like an immediate one is to help 100 families achieve financial freedom. Because you guys heard a little bit about my story, and I was able to make that decision to choose my family over work. And I went, especially like I compare it to like our industry in oil and gas, where it's very volatile, very up and down, right? Like my goal has been to help more of those people to where they can start building what I did on the side, or medical professionals, doctors, right? Start, even especially with this world of AI and all that's changing, right? And trying to hedge your risk. It's like, I want to help them invest in real estate, create financial freedom, right? So they can hedge their bets. But back to the coaching and back to the sports thing, it's like, I just love helping people, and I love coaching my kids, right? I love being able to be involved in that. But that same sort of satisfaction you get in helping and coaching a young kid or a young athlete, being able to help adults start to get on their path to building, just like you're doing, right, Brett? Like being able to help people, I don't know, it's so satisfying.
It's awesome. And bringing in the coaching kids thing, man, put yourself in those scenarios. You could pick that up and put it into business, because some of my colleagues from the sports world, often build the best teams, because in the sports world, you think about even being a quarterback, say middle line, whatever, the coach is a whole new world of managing chaos, the chaos coordinator piece, and keeping it calm because you're consistently putting yourself in the fire, madness and chaos going on around you, and you're focused on not only the goal, but bringing the team together cohesively to effectively attack the goal consistently, and doing it in a way that brings not only pride in what you're doing, but having fun. So it's awesome to see the sports world connect with the business world. And I know some of the best teams out there have that specific mentality in behind them. Now, you've built Gregersen Properties and YO Houses. What's next?
You bet. Hold on. Yeah. So what is next after building that? What I found along building them is I loved building the companies, right? I love the being able to be ingenuitive and being able to build things out. But really along the path back to what we were just talking about is I love being able to help other people achieve the same thing. So my goal now is actually, as I mentioned earlier, about building out my company, right? And being able to have managers in place and my COO in place so I can be a true CEO and a visionary. Is I want to be able to go help more people, right? Speak on bigger stages, right? Build out, like for example, we have our first 2-day workshop in July here in Houston, where we're going to bring in our first 30 to 50 people and get them on their path to financial freedom. So that's what I'm excited to spend more time doing, so my companies can start to run themselves, right? And then I can go help more people. So that's what I'm most looking forward to.
So you're tried and true. The results are there. You're out. You're actually at an event out in Arizona right now. And I can tell that you're a direct to seller. You've been through these deals. You've talked through these challenging situations. I've been there too. I can see it. I can hear it in you. Where can the listeners find out more about you and maybe even jump on the Gregersen train?
Yeah, absolutely. So wherever people like consuming content, if you guys are on Instagram or YouTube, I'm on all those. Just find me at Casey Gregersen. But also just go to our website, right? CaseyGregersen.com. You'll be able to see our events, upcoming ones. I mentioned that one in July here in Houston, but any of our future ones. And if somebody's watching this down the road, I would just go to our website, CaseyGregersen.com. You can join our investor community. And ultimately, I'd love to get you guys down to one of our workshops and meet you face to face.
Awesome. And the investor community, is this single family? Is it 1 to 4, or is it up into multis? What asset classes do you guys focus on?
Yeah, so it's broad. I don't do a whole lot of commercial, but yeah, we focus on the single family fix and flips. That's often a great way for people to start. But I've grown over the years and gone from single families to fourplexes all the way up. Our biggest one is a 66, or no, we're actually 66, but we got 120 unit. We're closing in a couple weeks. So all residential. Thank you. So all residential real estate is what our focus is.
Nice. Well, thank you again, Casey, for your day, and good luck on the live closing calls tomorrow.
Awesome. Appreciate you, Brett.
Thanks, man. Casey's story reminds us wealth is built in the systems you scale and the values you protect. Stay strategic, stay patient, and always build with purpose. Until next time, keep designing a life you don't need to escape from. This is the Real Estate Mogul MD.
This episode is powered by Crescent Tech. If you are looking for a CRM built for real estate investors, discover Streamline REI by Crescent Tech. Simplify, automate, close faster.